Congressman Brady made some comments about the corporate tax cuts that he helped to write during the Trump administration, and he was very positive about it. Do you not acknowledge that we were starting to see before the pandemic some growth in wages at the low end, organic growth and a very low unemployment figure, great minority employment numbers? We were seeing a lot of progress there. You don't think reversing that, the corporate tax cuts, would hurt in any way?
So, Joe, it's a pleasure to be here. And let's start with the fact that the end of that boom that began in 2010 was great. We had strong wage growth. We had low unemployment. But in order to continue and lay the seeds for the next generation of economic growth, America needs to reinvest in herself. This type of infrastructure situation needs to be paid for. Look, freeways aren't free. I think that's a pretty conservative principle. The question is how to do that. In terms of your tax argument, look, President Trump slashed corporate taxes by 40%, and corporate tax revenue fell by about 40%. These claims that this tax cut was going to pay for itself, no, it piled on more debt. The corporate taxes pay about 1% of GDP in America today. In Germany, corporations pay 2%. In England, they pay 3%. In Canada and Japan, close to about 4%. Look, in the go-go 90s, where we had strong wage growth, good unemployment numbers, corporate tax figures were up at about 2% of GDP. Even if President Biden's plan were enacted as proposed, you still would probably be a little bit less than 2% of GDP. So I don't see any problem. In fact, to the contrary, when we've had corporations actually paying taxes at this level, the economy's been just as strong in the past.
Aaron's very clever. I don't know whether you caught it, Erica, but the boom began in 2010. So it was sort of just the tail end. So it didn't really have anything to do with the corporate tax cut. Would you raise taxes to this extent at this point, or maybe after we've recovered more from the pandemic, Erica? When would you do it, or never?
So I think it's important to pay for the infrastructure investments, but I think it's important to do that in a way that's not so economically damaging. The corporate income tax is the most harmful tax for economic growth. And even though corporate taxes may have been high in the past, across the globe, we've seen not a race to the bottom, but a race to the mid-20s and a race to a corporate tax code that's more conducive to investment. Raising the corporate tax rate to 28% plus another $900 billion or so of corporate income tax hikes would be going in the opposite direction, would be placing us at a competitive disadvantage. And when we think of comparing to other countries, something that's a little different in the United States is that we have a really large pass-through sector. And so if you just look at corporate receipts as a percentage of GDP compared to other nations, we're going to look lower because so much of our businesses take the pass-through form. So if you equalize that and look at other comparisons of effective tax rates, we're right now by no means an outlier. We're at or above average to our OECD peers. And so raising the rate is going to be going in the wrong direction and make us an outlier.
Shepard Smith here. Thanks for watching CNBC on YouTube.